I love that idea of getting free shares, which is it is a very different way of looking at buying low and selling high, which is a very difficult task to do. But if you find the right strategy for it and have the patience and the skills to be able to do that, that's definitely possible. Tell us a little bit more about that. What do you mean by that free shares? And
Okay,
share a
sure.
little bit about your strategy or like methodology, how you go about it. That would be super cool.
Absolutely. So I'll give you the most recent example. We actually sold it this morning. I bought Verb Technology, ticker VERB. If you look at the yearly chart on it, it's hit a low of 91 cents, and then seven other times it hit a dollar on the head, but it's never lost that base. Each time it has gotten to that base, it's gone to a minimum of 30%, typical medium ranges of 50 to 60%, and over two times it went 240%, and as of today, it went 150%. So what I do is I get a starter position around $1.10, $1.05, and as it goes close to that 1 year low, I kind of backload really heavy on it with 5,000 or 10,000 shares, depending on your portfolio size. And today it went 150%. So I sold at the top, but what I do and what I always do is I keep a percentage of my profit in shares in the company, and I allow them to grow and become the company that they are. Because a lot of these companies, had you just sold for, small gains, even 150%, as big as that seems, AMD was under $2 for a long time, and now is in the 90s. And a lot of people think it could be a $500 stock one day. So some of the companies, maybe not necessarily Verb, but I want to get those high growth stocks that I believe have that potential, swing trade them from support levels and accumulate as many shares as I can. Then in the long run, when I'm selling calls on these things, a single call that I would sell on my profit, and I always try to keep a minimum of 100 shares because that's what you'll need to sell a covered call. I have some now that I sell a covered call, and it's higher than the total cost of my entire position that I started with.
Wow, that's super neat. In you found the system the way it works for you. That's super cool. Do you first screen the companies that you want to buy from a point of view of fundamentals? Because you mentioned in your conversation, I would look for high growth companies. So is there some sort of a fundamental analysis or market or growth opportunity and analysis that you do first before you go through figuring out the support levels for in terms of when do you go in and when you go out? How's that like initial sort of like watch list process come
Sure.
about?
Well, there would be two different kind, to be honest with you. Some are just swing trades because they follow a certain chart pattern historically and consistently. Not all of those swing trades will be companies I believe will do great long term, but the ones that I do believe that will do great long term, and I implement that same strategy, I absolutely do fundamental analysis on it. And as with most growth stocks, they're not going to have great returns. They're going to have a lot of offerings, and it's going to be very rocky the first few years. You just got to kind of see past that and see what their vision is. And if you believe in their vision, and you can catch those on those same support levels and accumulate some of those free shares, like just for an example, I think Nano Dimensions has a very high upside in the next 5 years, because as technology changes and the cost of being able to 3D print, circuit boards and things like that, it's going to be very, very valuable. So I will look for those companies, and that's why the name of my portfolio is Next Generation Ideas, because I want people to see past the current and look forward for the future. And I am going to try and get you in those low positions to swing trade for profit, but hold a small percentage of those shares long term, and let them grow into what I believe that they can grow into.
Right. Makes sense. That's super cool.